Hello and welcome. You're watching Market Headstart on Moneycontrol. I'm Sakshi Batra and this is where we get you prepared for the trading setup of the day. I also have with me Kshitij Anand. He's the markets editor at Moneycontrol. Very good morning to you, Kshitij, and thanks very much for joining in. Well, it's the beginning of yet another week, and last week was not very encouraging for the Indian markets. We actually saw all the 4 trading sessions that we did for the Nifty and the Sensex. They ended in the red, and in fact for the whole week a 3% loss for the benchmark indices as well. So what are the hopes for this week? Is there any hope for recovery this time around? What are the indications telling you?
Morning, Sakshi, and good morning, viewers. Well, definitely we started off the month of October on a pretty weak note. In fact, both Sensex and Nifty has actually broken below crucial support level. Sensex is now below 38,000, while Nifty 50 also breached 11,500, 11,300 and 11,200 levels respectively. Now, if you look at for the week, I think given the fact that we are already trading near crucial support levels, there's a higher possibility of a technical bounce back. Now, first, let's also understand what really led to the fall in Indian markets. We're already weighing under tremendous pressure of a slowdown, not with respect to the global economy, but for the Indian economy as well. And the RBI statement, or the RBI policy meet statement coming out on Friday, suggested that the slowdown is here to stay. In fact, the fall in, if you remember, Sakshi, on Friday, MPC committee has slashed the growth forecast for FY20 to 6.1% from 6.9% earlier. Now, this reflects that the slowdown is here to stay, at least for this financial year. Even though government might have come with a lot of policies as well as stimulus measures to boost the economy, but the lag effect will take place, and there's a higher possibility that the turnaround that most of us or most of the investor community is expecting might take post FY20. So that is something which is actually weighing on investors' mind at this point in time. Now, if you look at the equity markets or the last week, both Sensex and Nifty slipped around about 3%, but the big carnage was seen in the broader market. In fact, the S&P BSE mid-cap index and the S&P BSE small-cap index fell by around about 4% in the week gone by. Around about 300 stocks actually hit fresh 52-week low on Friday, and more than 100 stocks fell 10 to 30% in the small-cap space. Now, if you look at the rupee in fact recovered slightly against the US dollar, but FIs continue to pull out money from Indian markets. In fact, they pull out around about 3,000 odd crores so far in the month of October.
Absolutely. Now, if you see, Kshitij, lots of macro factors have not been working in favor for the domestic markets as well, keeping in mind the broad economic slowdown that we are consistently seeing, and the kind of measures taken by the RBI also suggest that the slowdown is here to stay, and that is something that is really denting the sentiment as of now. But technically speaking, what are the patterns really telling you on the charts? You did say that a technical bounce back is expected or could be expected on a day like today or in this week as well. So what are the crucial levels that all the traders and investors need to watch out for, and how should they position themselves today, right ahead of the public holiday tomorrow, which is on the account of the Shera?
Right. In fact, the last week was also a truncated one, and this week is again a truncated one. Now, even though Wall Street, if you look at the global cues at this point in time, they remain fairly stable. In fact, most of the Asian markets are also trading with a positive bias. But U.S. job reports data did suggest that a rate cut could be deferred by U.S. Federal Reserve. So that is something which could weigh on emerging markets like India. Although it is still good for the U.S. economy. But then again, a fresh rate cut from the U.S. Federal Reserve could have been a booster shot for emerging markets like India. So that might not come, but that could weigh on investors at this point in time as well, which is still not reflected in the Indian markets per se at this point in time. Now, speaking specifically with regards to technicals, on Friday, Nifty 50 formed a long black day or a big bearish candle on the daily charts as well as on the weekly charts. It was the third consecutive. In fact, it snapped a three week of winning streak, Nifty, and closed in the red in the week gone by for the week ended October 4th. Now, 3 crucial levels to watch out for today would be 11,158. Now, that was the intraday low formed in Friday's trading session. In case we slip below this level or breach this level on the downside, the next bit of support will come at 11,000 and 10,000, around about 985. So that is another bit of support to watch out for. On the high side, 11,400 is your resistance level to watch out for, and 11,554. So most technical experts at this point in time suggest that investors should avoid creating any long positions at this point in time till the time Nifty is trading below 11,400 levels. So yes, a break above 11,400 will open room for 11,554 and 11,600, and a break below 11,000 and 10,985 could actually be used to create fresh short positions at this point in time. If you look at the options data, maximum call open interest is placed at 11,500 followed by 12,000, and maximum put open interest is placed at 11,000 followed by 11,200.
All right, so those are the crucial levels to watch out for, and they will be defining the trading range also for the session today. The technical experts do believe that right now it's not the right time for you to go fresh long, because 11,400 is the crucial resistance level that we need to see on the Nifty before going, a complete long on the index. But right now, what is more important for all of us is to be having a stock-specific approach, and lots of stocks again will be important in today's trading session as well. So, Kshitij, which are the top stocks on your radar?
All right. The first stock that we have on the list is Glenmark Pharma. In fact, the drug firm on October 5th, that is over the weekend, said that it has received a warning letter from the US health regulator for its Badi facility in Himachal Pradesh. Apart from that, from the IT space, Wipro will be in focus. Now, the IT major on Friday said it has completed the acquisition of US-based International Tech Group Incorporated, that is ITI. And from the auto space, Tata Motors will be in focus. Now, the Tata Motors said it has bagged orders to supply around about 300 electric buses for Ahmedabad Jamar, that is AGL for today. Now, apart from that, Sakshi, I also believe that you're also tracking some stocks based on what brokerages are recommending.
Absolutely, Kshitij. Two stocks on my list as well. So the first stock which you need to keep a watch out on is Bpcl. Now, CLSA has come out with its report on this one. Now, it maintains a sell rating on Bpcl. The target is 300. Remember, in the past 1.5 weeks, we have been seeing consistent surge on this stock on the back of the kind of divestment news that has been pouring in. Now, CLSA says that the stock rally is not left much on the table given the kind of privatization news which is doing the rounds right now. But the stock may trade around 445 levels per share based on the peer multiples right now. But the 300 rupees target is much below the current market price of 514. Apart from this, from the pharma space, Biocon is something that you need to watch out for. Morgan Stanley has come out with its report on this one. It maintains an overweight rating on the stock. The target price it has given is 350. Remember, the current market price is just 231, so there's a strong upside over here that Morgan Stanley really sees. Now, Biocon and Mylan Pharmaceutical have actually launched Semglee in Australia. It is the first insulin glargine biosimilar which has been launched in Australia. Now, remember, this is a major portfolio for Biocon as well, and launching this kind of a drug which will have a lot of subscription or a lot of market in Australia also will bode well for Biocon as well going forward. So these are the two stocks that you need to watch out for. Apart from this, we also have some technical recommendations for you. So, Kshitij, who have you spoken to and what do we have for the day?
Right. In fact, well, to make your day more profitable, we spoke to Religare Broking, and they've given us 3 ideas for today. Now, the first stock that they have on the list is HCL Technologies. Now, that's a buy for a target of 1130 and a stop loss of 1045. Biocon from the pharma space, that's a buy for a target of 256 and a stop loss of 220. Bhel, now that's a sell for a target of 43 and a stop loss of 51. Now, the return potential is close to 6 to 10% on all the 3 stocks. These are not intraday trading ideas, but more of a positional play. So in case you are initiating any positions based on these recommendations, do consult your financial advisor.
Right. Thanks a lot, then, Kshitij, for giving these bright ideas to all the investors as well. And with that, we come to a wrap here on this edition of Market Headstart. And you stay logged on to moneycontrol.com for more news and updates. Thanks for watching.